Hey, I'm Steven and this is Solving the Money Problem. If you're new, welcome. If you're not, welcome back. So in this video, I'm going to share with you guys how I built my real estate investment portfolio. This isn't going to be my usual style of tight scripted video, just going to be more of a stream of conscious, a little bit of a recollection of how I built my portfolio. So if you're interested in seeing the nitty gritty details, how much money I was earning, my income, how much I had saved, my deposit, what I purchased, how much I spent on renovations, all of those kind of things, then watch the video. And if not, well, see you at the next one. So 2010, I'd been working full time for about 2 years and saving my ass off. I was working full time earning a $50,000. By the way, all of these numbers are in Australian dollars. Look up the conversion rate now because it'll change by the time this video is live, so it's kind of irrelevant, but yeah. So I was earning $50,000 a year at my job, and then I was also doing some side hustles, working after hours. I was doing graphic design, web design, logos, like merchandise, and I also had like a few other online things as well. So I was definitely hustling. And at the time, that was it was below average for income in terms of the entire country of Australia for full-time workers. But for somebody of my age, it was a little bit above average just at my job, and then a little bit extra on the side. So I'd saved up a fair amount. And one day when I was trying to think of like how to get ahead further financially, I was looking at how much rental income, how much rental expense. Man, I can't even say the word rental. Yeah, it's so tied now to investing. I can't even say rent I was paying. How much rent I was paying versus how much mortgage repayments would be. And then looking at how much property prices had sort of increased over time and doing the numbers. And I had this holy fuck moment where I just literally, I looked and went, wait, damn. Even in the worst case, I looked at like probably 15 or 20 years worth of data and like look at that. And even in the worst case period, I don't know how long I looked, maybe it was 5 years or something like that. Even in the worst case 5-year chunk of time, this happened. And I realized that effectively I'd be something like 3 times better off by buying a property, even if the value of that property did the worst thing that it had possibly done in the last sort of 15-year window in a 5-year period. I'm like, well, you know what? I can deal with that. I'm probably going to end up coming out better for this. So I ended up buying a property and settled on October 2010. I was 25 years old at the time. I purchased for $313,000 a one-bedroom apartment in Sydney in Marrickville, which is about 7-8 kilometers south of the central business district. I bought very close to transport. I was thinking at this from a couple of angles, like yes, I wanted to live there, but not necessarily forever. It's just this is going to be a good opportunity to get into the property market. It makes financial sense, etc. So I ended up buying a property that had no common walls, which is very rare for an apartment. So I have no direct neighbors on that apartment at all. Overlooking a pool, nice gardens, all that sort of stuff. I didn't have a car park because it was so close to public transport that I thought, you know what, not a big deal for me, and it's not going to be a big deal in the future either because there's going to be fully autonomous cars. Yes, I was thinking this back in 2010. Bit of an aside, but I ended up having to put in total 10% of the purchase price and then a tiny bit for some solicitors and lawyers fees. So $31,300 went in, a 10% deposit. At the time, the Australian government had a First Home Plus grant, which for purchases under $500,000, which I fell under, all stamp duty was exempt, which meant that I saved about 5% of the purchase price. Otherwise, I would have had a huge hit of stamp duty as well. So I was really lucky in that sense because timing-wise, we'd just come out of the global financial crisis and the Australian government was really incentivizing the economy to sort of, putting some kindling under there to get it lighting and sort of burning away again. So that ended up happening and just worked out great in my favor because I was able to take advantage of that. Otherwise, I would have been saving probably for another 6+ months, maybe 9 months or more. And that was, working my face off and living very frugally as well. Hey guys, before I forget, just letting you know that WeBull have extended their offer for US residents. If you'd like to help out the channel and get up to 2 free stocks by opening a new account with WeBull, check out the link in the description. Alright, let's get back to it. I also, with my lender, I took a 90% loan. Now normally there would be a lender's mortgage insurance, an extra sort of charge on top of that of a few percent of the loan amount, just to cover the fact that I have a small deposit. What if I buy the property and then its value is worse and then I default and they have to sell and they lose money, just to cover their asses basically. But again, because it's just post GFC and everyone was very relaxed, trying to stimulate the economy again, I was exempted from having to pay that also, which meant totally all I needed to literally pay a 10% deposit and then my solicitor fees, which came in at a bit under 2,000 Australian dollars. From there, basically for the next 2.5 years, property-wise, nothing happened. I saved my face off. I lived under the poverty line. I was really, really relentlessly researching and learning about investing and reading forum posts, and went from reading hundreds of posts a day to posting hundreds of posts a week on forums and sharing my insights over the sort of 2.5 year period where I really wanted to get a a deep understanding of how to leverage this first property into a much bigger portfolio. So I saved and saved and saved, and at the same time the market was sort of ticking along slowly in the background, but not a huge amount had happened. However, after almost 3 years, I got my first property revalued, understanding that the market had grown. The property had grown more than I realized over those 3 years. I was able to take out $114,000 of equity, and I did. I just pulled it out, put it into an offset account, which means that I don't pay any interest on that money until it's used. It's kind of like a line of credit, except the money's right there for me and the credit can't be turned off. It's mine. It's like it's in a savings account that's offsetting interest on a mortgage. So I had that war chest and I was like, great, I can go shopping now. I've been doing research. So it was a long time coming, but after almost 3 years, I've been saving and researching. I'd picked where I was going to be investing, and I went just berserk. I went to open homes every week. The place that I ended up investing was where I'd bought originally, which is hilarious because I ended up doing a round trip almost everywhere across Australia, thinking, where's the best place to invest outside of this? I want to diversify and rah, rah, rah. And after all my digging, I was thinking of places in Queensland like Coorparoo, Upper Mount Gravatt, Moorooka. I was also looking, in other places in Sydney and all over the place. I looked into interstate as well, just everywhere. And I realized that for my money, I couldn't see a better opportunity than the same suburb, which is a great advantage. Once again, because I was able to, on a weekend, on a Saturday, go to all of the open homes, all of the inspections, everything in the entire suburb basically. I would just get on my bike and just pedal like a maniac. It was quicker to do that than drive and find parks, plus saving money on driving. So I was doing this, turning up to open homes looking like I'd fallen out of a garbage truck. But I got a good reputation with the real estate agents in the area because they knew I was serious, and I got to a point where I was making bets. I would turn up to auctions, and what I would do is I'd write on a piece of paper and or an envelope or something and say what it's going to sell for and give it to the auctioneer or the agent and say open that after the auction. And the first time I ever did that, you cannot believe it, right? This place sells for the exact dollar amount. I think it was like $451,000 was the sale price, and that was exactly what I put on the guess. I couldn't believe it, and the agent was like, he just flipped out. He's like, what the fuck, dude? What the fuck? He thought it was like a magic trick or something. But the point there is I got so good at understanding that particular suburb because I just went to every open home and then went to all the auctions. What does everything sell for? And just built this mental picture in my mind. I was like a sixth sense almost. I could enter a place, look around. I've already checked out, and I know where it's located because I know the suburb, every single street. Okay, I know roughly what this place is worth. And it turned out that my guesses got extremely accurate. So when an opportunity came up, I could identify one, and this is exactly what happened. On a Sunday, after probably almost every other inspection, in fact it was the very last inspection, and it worked out, the timing was great because it was in a building right near my apartment, very close by. So I enter this open for inspection, and I'm just puzzled. There's a fucking family in there, like the owners of the house, like an overweight guy sitting slouched back on the bed in the main bedroom with his gut hanging out of his shirt, like eating a packet of chips or something. There's kitty litter and with shit in it in the apartment, like there's cats with cat shit in the apartment while it's open for inspection. And I saw the agent, I had a huge smirk on my face because we knew each other. He'd seen me out at dozens and dozens of his inspections, right? I'd put offers probably on a couple of his properties prior to this too, because once I was ready to go, I was like putting lowball offers on a lot of properties. But I could just see the look of frustration on his face. He's like, because picture this, right? You're a real estate agent. You're selling a property. You're a professional. You know what you're doing. You've got years of experience selling in this particular area. Clients come to you and you give them some advice. Well, you know what, guys? You probably should clear out and style the apartment. You probably, want to present it as nicely as you can. It'll cost you a couple of $1,000s and it'll make you an extra 20, 30 grand. Didn't listen. There was a screaming kid in the apartment as well. There was a load, like the washing machine was going, they were doing laundry, and I was just like, what the fuck? Are these people, they're not dumb, they can't be dumb. And I realized that they were in a hurry, at least this was my assumption, and they also weren't in an extremely tight financial situation, because why would you not make the effort of getting that extra $20,000, $30,000 that actually styling the apartment is going to do, right? These guys just didn't seem to care. I'm like, oh, cool, well, maybe that works to my advantage. Anyway, I made an offer with the agent that was just pretty cheeky, and he came back to me, he's like, come on, mate. Come on, mate. And, we had a good rapport at this stage. It's good to meet the agents and really show them you're serious and, and connect and build that relationship. It can really pay off for you. So I put the offer in and he laughed at it, and then I came back with the second offer and I strategized. I've still got a document on my computer. I might put it on the visuals with this video when I edit, actually showing my plan, like what I'm going to offer initially and what they'll probably have already offered or counter offer with. And I was just really planned, and my plan nailed it. So the property I thought was worth close to $500,000, close. And I thought that people, maybe they'll come in at 450,000 because it's like a nice round number. So my very first offer was $450,100, just in case, because then I would have the higher offer. Put me in the position of power, right? In case somebody lowballed as well, right? So that didn't work out because the agent laughed at that one. So I put in my offer of $460,100, assuming that, you know what, if somebody comes in and sort of starts at the 460 mark, I'll be ahead of them. You know, again, I just have a position of power. And what happened that weekend just really worked in my favor. Unbeknownst to me, the vendors had actually been to an auction that weekend and purchased a property unconditionally, which they had to follow through on. Therefore, they had to sell their house, their apartment. They had to sell it. And they just started their campaign, which meant that it could take up to 4 weeks, and then the settlement time, and they were stressing. I didn't know any of this. But what happened was I put my offer in, and the agent actually met with them because they were panicking a little bit because they'd bought this property, and they're like, again, I didn't know any of this. But it turns out that I had my offer already in before the agent met with these guys because I wanted to get the offer in quickly. I gave him the time pressure. I'm like, you know me, dude. I'm not fucking around. I'm looking at other properties. Like, I don't want to waste time. So I'm putting an offer in. If they don't accept it or come back with a counter offer, it's automatically rescinded at, I don't know what time it was, like 6 p.m. or something. Put time pressure on them, which is a genius level strategy. I read in a book, I'm sure I didn't think of that. But the whole point there is if you can push the pressure onto the vendor and they're the one under time pressure, it's like, here's my offer, but it's automatically going to be removed because I'm looking at other properties. If you don't accept or, counter it by a certain time, it's automatically removed. Then they lose that offer. And if that's the only offer or their best offer, they're maybe more inclined to accept that and then take the uncertainty. So anyway, while the agent was presenting the offer to this couple, he got a call and he jumped out of the room. Just excuse me, guys, because it was somebody that was calling about his that particular property. So just to let him know, just in case, right? And the person came through with an offer of $460,000. The agent told me this afterwards. And he said, I'm sorry, we've got a higher offer. Get back to me. Back to the thing, right? Anyway, in the few moments that passed after that, there was another call that came through, a voicemail. I found out again later someone had actually offered $470K, but this was all in audio I got to hear. But again, at this point, it's like, who cares? Doesn't matter because the guys accepted my offer. Why? They were concerned. There was a big fight apparently between the husband and wife. One didn't want to, one did want to. If you put yourself in their shoes, you know what? Okay, you've just bought a property at auction. You have to buy it. There was obviously some financial comfort there. They weren't desperate to get every last cent for the property. And it's like, I guess the final conclusion was like, well, you know what? Screw it. Like, this is enough. Let's just not have that uncertainty because what if nobody else buys it? What if it doesn't sell? Then we're screwed. So that's how I bought the first property. And I believed that it was probably worth close to $500K. I bought it at $460. 3 months after that purchase had settled, I'm allowed to go back to the bank and get a valuation done if I believe that the property price has increased or I've added value. In this case, there was a property that sold directly under my apartment, ground floor, exact same floor plan, but lower, therefore less desirable. Maybe like if you're, is a little bit less able, in terms of your body mobility, then maybe there's appeal. But generally speaking, elevation is a little bit more valuable to most people, a bit more privacy, a nicer view, etc. So the property that sold directly underneath between the 3 months when I bought and when I was able to revalue sold for $520,000. Similar condition, mine was obviously superior for its position. So I basically waltzed up, got my valuation done, and that came back at $525,000. So I immediately pulled out a pile of equity. And actually the purchase price, the deposit that I used, so the $114,000 allowed me to buy this property with a 20% deposit. So I had a little bit of saving and stuff as well. But what that allowed me to do was avoid paying lender's mortgage insurance, which at that time would have actually been a big fee and an unnecessary one. However, after the property settled, I got it revalued at $520,000. I actually increased the loan up to 90%, well 88% technically, and drew out an absolute ton, like another $97,000 of equity immediately out of that property and just parked it into an account. So I put in 114 and then I pulled out 97. I'm like, fuck, this is amazing. Like, this is how property investing works. This is awesome. The reason that I was able to pull the money out because I bought so well and the conditions lined up. But the whole thing here is like, someone might say you got lucky, you know, these people and whatever their situation was, of course, but you make your own luck. I was going to all these open homes. I was putting offers on tons of places. I built relationships with agents, you know, I'd done the work. And that's kind of how things panned out. So almost immediately after buying the second property, which was in 2013, it settled in September, I got the new property valued and then I went shopping again. It took a couple of months to find a deal, but by that stage, what I was buying, you know, earlier for, you know, the high 400s was already worth into the sort of low 500s. So after lots more inspections and blah, 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 finally, amazing, a gift from the gods. So what happened was I saw a new listing appear online from an agent who I didn't recognize, from a company who I didn't recognize, which is very odd. Typically, at least where I was looking, a couple of agencies dominate the area, and then there's a few strays that just have a few leftovers, and very occasionally you get it like an out-of-towner, so to speak, where it's just like, what the hell? I've never seen them sell a property. Who's that? Well, I did some homework and it turned out this person's office was a really long drive, like almost an hour away from where my the property in question was. And I realized that this agent, I looked at all the other open homes, I'm like, crap, this guy's got a bunch over here, he's going to have to drive, it's going to take him like freaking 2 hours plus this just to do this one open home, must be a huge pain in the ass. Maybe there's an opportunity here. So I turn up at this open home, the very first millisecond it's open, I was like stealthily there, and funnily enough, it was right near the apartment I was in, so it was a very close walk. I turn up there and I thought about dramatizing this just in case as well, and get to know the agent, and, you know, I won't go bore you with all the details, but a little bit of small talk, building rapport. I'd never met this guy, of course. He was being very open and honest. I was as well. I told him I'm not messing around. I'm looking for apartments. Now, I was also fishing for information and get some clues, and so this next little bit is quite a story, at least I think so. So I was prompting him to sort of disclose information, and then after a bit of prompting, he came back and he said, to be honest, mate, because we've built some good rapport now, to be honest, mate, I think the rent's a little high in this place. Like, they're getting $400 a week. So maybe when you get new tenants, you might have to like reduce the rent a bit. And my brain just broke. He was wrong, like very wrong. I realized, however, that the perception that this suburb had years ago when he was sort of coming up, and obviously if he's not traveling here a lot, he probably still has the wrong perception from the past. That was correct. But there'd been strong growth. There was gentrification. You know, there was a new light rail system that was about to come in, which he was unaware of and failed to mention on his listing. And it was opening within I think 2 or 3 months after. Oh man, I don't know. Anyway, that's another aside. But there was a few key things missed, and I realized that he was completely out of touch with the market. So I then decided to approach this like well, I'm just going to pay whatever it needs. I just really want this apartment. Like, I'm just whatever. I just want it kind of approach. So giving him the impression maybe I was paying a bit more than it might be worth, but in reality, it's probably the other way around. And so what I did, just overly dramatic, there was one other person that inspected the property too. It was poorly advertised. It was listed, I think, on like a Friday night, and it was Saturday, and the next Saturday it was open. It's like just atrocious. Anyway, so the other person disappeared, and as soon as that happened, I'm checking our burning time till the open home closed, so there was no other competition, like literally just a shutout. A few people wanted in, I was just dominating the conversation. I mean, when it comes to investing and stuff, I'm pretty ruthless. I'm not mean or aggressive to anybody, but like if I want a deal, like I want the deal, okay? So a few people popped in, and I continued to talk with my now friend agent, so they didn't really have too much. You know, he tried to quick address to them, but he sort of came back to me to carry the conversation on. As soon as there was nobody there and the open home was no longer open, the half hour had passed, I said just so dramatically, I'm going to make you an offer you can't refuse, and pulled out a check and like overly dramatically signed it, an unconditional offer, which is very rare, but it's like, I'm serious, and if you accept this, you get paid. And we bantered. It was a little bit too low and stuff, but we got talking, and he basically just confessed to me like how much his commission was and how much the vendor wanted in a roundabout way. And I hope I didn't throw that guy under the bus. Anyway, and I knew exactly what the numbers needed to be, so I put the next offer in. And you know, also like, let's wrap it up, dude. I'm looking at other properties. We'll get this done. You won't have to come back out and open it. I know it's a pain in the ass. So like, you know, everyone's winning. And again, I got the property, the vendors accepted. I put time pressure on them saying the offer would be withdrew. I already sort of prompted the agent beforehand and said, dude, like, I'm buying everywhere. I just bought this place here. Look it up. Like, it's the same name in the same area. You can check. I'm serious. I'm buying again. I've just pulled equity out of it. You can look at the records. So let's get this deal done. And he was happy to oblige. So everybody won in that case, except the vendors. There was a connection between his father, who like opened the agency, and that vendor from years ago, and so out of loyalty they listed the property. This property I got valued, I think it was 3 months again after purchasing, and guess what? $550,000. I paid $500,000, valued at $550. So I just, same process again, I pulled out a little bit more. In this case I think it was about 40k, because I bought that one with 88% loan. I took that 40,000 plus, then I also milked a little bit more out of the first one and the second one. So I've been kind of like just milking my properties all the while and just building up. In total, actually, out of all of those properties, and then the following, in total I've pulled out more than $400,000, which has helped me sort of recycle through the property portfolio. So the next one, I decided I'm going to buy a development site in Queensland, because I'm a little bit heavy in New South Wales, and where the market cycles are at now, I think that there's potential for Queensland to have a strong growth cycle. It's underperformed enormously, and I still believe that there's still got a strong chance of really steady growth over the next decade or so. That's another story, but I felt pretty strongly about this. I knew exactly what I wanted, and weekend after weekend I just jumped on an airplane. Got the very first flight up to the Gold Coast, because I was a tight ass and didn't want to go to Brisbane, so I actually got a rental car and drove there. I'm so frugal. It saved me like $20 or something. But so I did that, and I went to like every open home in Maruka, which is where I had decided to purchase. Look, I knew exactly what I was looking for. I told all the agents, I brought them a list of what I was looking for, built rapport with everybody. And after about 5 weeks, or maybe it was the 6th week in a row that I'd gone up there and built some really great rapport with agents, I found the perfect, exactly what I was wanting. It was a corner block, juicy big corner block. It was developed, it was zoned for development, so low medium density, so I could build up to like 9 or 10 apartments on that site, multiple townhouses, houses. I could do a subdivision. There's so much potential to add value in the future. I was like, oh man. So I got very excited about that property. As you can see, I inspected the property, and the agent there, we'd built quite a bit of rapport. In fact, later we ended up going out for lunch with her daughter. She wanted her daughter to pick my brain about property. Unbeknownst to me, this turned out to be the last ever property that this woman sold. And when it was listed, I looked online and I did some digging and discovered that it was zoned for development, but it wasn't written in the listing. The agent hadn't known that it was zoned for development, or they hadn't, just were lazy, but it turned out they just didn't know. What had happened a couple of years earlier, like 1 or 2 years earlier, where there'd been all these zoning changes and they hadn't been updated on council maps online. So unless you actually did a proper inquiry, like a title search on that property, you would not discover its new zoning. So I was like, holy crap, she doesn't know. Nobody knows. It's not on the listing. And I was like, dude, I need this place. So again, I came in with a little bit of a lowball offer. She already knew I was serious. She'd seen me at a bunch of her other open homes. And again, I just did the whole asking, probing, getting information. It turned out the vendor had just retired. I'm like, yes, they just want the money. It's probably paid off. They probably have no debt. She said they'd already bought another place. I'm like, yes, this is so good. This is amazing. Put him an offer again, way too low. Came back. And eventually I said, okay, fuck it. I put in an unconditional offer, put on some time pressure, $612,000. Again, I'm thinking like it's worth probably $650 or so, maybe a little bit more than that. But I'll start low, but I went, weird increments, and I thought, okay, cool, great. Anyway, the $612,000 I bought that place for. Then I discovered that she retired. A few weeks later, I went to check the online listing to get some photos and things, and it was gone. I'm like, what the fuck? And the whole profile was gone. She's just out of the business. It was the last one. So again, a little bit of luck, so to speak, but I made my own luck. I was flying up on a plane 6 weeks in a row, going to all the open homes. I'd made dozens of other offers as well. It just has so happened that this one in particular, the circumstances were right, and I was able to buy it under value, and immediately, again, I was able to revalue that, pull some equity out, and that pretty much sums up where we're at for the property purchases. All in, roughly about $70,000 of my own cash and savings has gone in along the way. About 31, 32, 33,000 initially, and then over time I've saved more, and some of that cash went towards purchases, but predominantly the majority of the capital that I've had to build my portfolio came out of the portfolio itself, because I was buying properties under value. Every single time I bought undervalued. Maybe the first one you could say was fair market value, but once I had my investor mind on, I bought well undervalued, roughly 10% undervalued each time I bought a property, which is pretty good because immediately you have capital, right? If you're using a 10% deposit, you're buying 10% undervalued. Effectively, you're neutral. All you're worrying about now is stamp duty, legal fees, all of that crap. And so if you can additionally add value or buy in a market that's poised for growth, which I was also doing, then you've got that extra sort of boost that kind of gives you additional capital along the way. And this was the plan from day one for me, was just to build a strong base, get some capital growth, then focus on cash flow in the future, which was what I was able to do. all in those properties, that 70,000-ish that I put in total, within 7 years had increased more than 10 times to over $700,000 of net equity in the portfolio. Again, some of that had been taken out and sort of redeployed. So I was able to turn $70,000 into more than $700,000 in less than a decade. I still own all of those properties now. Today, my rental roll on average, like in total, all the rent per annum is roughly 100,000 Australian dollars, and my loan repayments are roughly 100,000 Australian as well, give or take. So the cash flow on these isn't huge, isn't enormous, isn't amazing. Yep, we do have declining rates. I think they will improve over time. But the whole strategy here for me with the property was leverage and compounding. Again, just to emphasize, $70,000 turned into more than $700,000 with very minimal risk. I was buying undervalued, so I've already built in a buffer and a safety net, buying in growth markets and able to add value, which I did in some cases as well. I think it was a pretty good outcome. This is why instead of focusing on shares in the early days, I took advantage of leverage and compounding. There's no way in hell, absolutely no way in hell I could have done what I did and turned $70,000 into 700K in the stock market with the same level of risk. Just sorry, no. My stock returns on my stock portfolio have been absurdly good. Obviously, my stock portfolio isn't ancient, so over time they may diminish. But my annualized rate of return is something like 25%, which is really good. But even that wouldn't come close to the property. I was leveraged basically at 90%. So $1 I give to the bank turns into $10, which amplified my returns enormously. All I needed was sort of somewhere around that 7 to 10% growth per annum on my real estate to absolutely decimate the returns that I could have got on a stock portfolio. Obviously, I've diversified into that now, and I've also built up my cash flow from other assets, business, etc. But in effect, that's how I built my portfolio. I was on a pretty low-ish income. I wasn't like dying. I wasn't, struggling to pay the bills, of course, but I was very frugal. I worked my face off. I saved every penny I could. I lived below the poverty line for a couple of years. And by doing so, I was able to accelerate my entry into the property market. And by buying well, I was able to amplify that very quickly, secure a few apartments and a house, and just ride that into the next sort of few property cycles, which is where we're at now. And keeping in mind, at the moment, I owe about $2 million on my property portfolio. Let's just say that it's worth $2.5 million. Keep the math simple. Bit more, but simple maths, right? If that $2.5 million doubles to $5 million, my debt doesn't double. My debt stays at $2 million. If I've got now $5 million of property, I could sell two and I've got no more debt, 2 properties owned clear and free outright with just rental income coming in. That's just a little bit of food for thought as well. I know a lot of people watching this will be like stock centric. I hope it's useful and insightful. My strategy in the early days really was to take on a little bit of additional risk and really just try and build as much capital, because I felt, you know what? If I've got just capital, then if everything turns to shit, I'll be okay. I can sell a few things. If I'm desperate, I'll be in a much better position than if I hadn't bought those. Great. And also, by owning those properties for a period there, I was supporting the cash flow, right? And they were costing me thousands of dollars a year to hold on to. It was like forced savings, which is fantastic, right? As a 20-year-old, there's plenty of temptation out there to blow your money like a moron. I was never prone to doing that. But just the whole concept of having to pay every year into your future, your financial future, right? Having to pay to support the portfolio actually was a great strategy for me. My whole philosophy was like stay broke. I'd much rather like not have money, not have access to it, just put it out of the way, invest it, and not have it free and just floating around. So that's how I approach things. Anyway, hope this has been insightful. I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. Thanks so much for watching. Let me know your thoughts in the comments below. Do you agree or disagree with anything I said? And of course, if you have any ideas for future videos, let me know. I read all your comments. PS, if you're still watching, you're awesome. This channel has kind of blown up since it launched, and I'm working on making the best possible content for you guys, but it takes time. Consider supporting the channel at patreon.com/solvingthemoneyproblem so I can continue creating content for you guys. There's a link in the description. Either way, the best kind of support is you being here and watching, so thanks again.
Stephen Ryan might look like a first home buyer, but he's not.
I bought that quite well in a moving market and thought I'd probably be able to go again pretty soon after.